In this video, we are going to be analysing GNUS. So to get straight into it, what are going to be key support levels? So if we did continue this downward momentum, 55 cents will be key because it's not only our first deviation on the 6-month chart, but it is also our statistical mean on the 1-year chart. So definitely be paying attention to this, because if we continue, this level is going to be that key support, and if we fail it, that is going to create some concern. And what we mean by fail it isn't a straight push. I mean, here we got that straight push through, but we came back. So when we're looking at these levels, and this is a key example of why we look for the retest, because here we saw it broke through, you got that retest, but it failed. We didn't hold at this level. So it showed that, okay, there was a bit of, there is stronger movement to the upside, and that's why we saw it continue up. But if we come down to this level again, break below it, come back to retest it, and start to sell off, that is the key thing. Because this would indicate more likely than not we are going to continue down, and that would most likely take us to at least 45 cents. Breaking through there would be 33, 31, 21 and 5 cents as those key support levels. Now obviously some of those are very far off. You don't need to pay attention to all of them, just always pay attention to the closest level you're at. So as of right now, if you're paying attention to the downside, be paying attention to 55 cents. If we break it, come back to retest it, then your key focus will be on that next level, which is going to be then 45 cents. Now on the other hand, if you want resistance levels, what are we paying attention to? And our closest level is 80 cents. That is our first deviation on both the 6-month and the 1-year chart, going to be a solid layer of resistance. If we break that, then we're looking at 90 cents. Going further will be $1.02, $1.06, $1.13, and then final levels taking us to $1.30 and $1.55. Now, so these are our levels, but don't only look at technical levels. Yes, technicals can be good and efficient. They can help you get better entries, but always the fundamentals are going to be the key driver. If news comes in and it sends a stock, crashing down, then don't be paying attention to 55 cents, probably not even the 44 cents, because stocks tend to overreact firstly on news, so you'll tend to get hit hard. But these technical levels, yes, you may get a quick intraday bounce off those levels, but if the news is heavy, you're going to fall. And on the other hand, if it's very good news, this 80 cents isn't probably going to hold up, because these small cap stocks, they move in big percentages. If some big news comes out that is good for it, you could see it pop up, to $1 or so. So don't be paying attention to these levels, or really any technical levels that you have when news is just released. You play the news, or just sit out if you don't know how to play the news. You start using the technicals when the stock relaxes a bit, really, and there's no fundamental drivers affecting the stock, because really it's just going to decrease the accuracy or the probability of really any technicals working. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.